past 2 or 3 sessions, we focused on how to actually make sure that you cut on interest, how to make sure that you pay your bond at a much faster rate, right? So we're still continuing in this theme with strategies to ensure that you achieve just that. But what amazes me is the unbelievable fact that so many homeowners are not aware that if they just pay just a little bit extra than their minimum installment, even if it's a 50 rand or even if it's a 100 rand, it makes such a big impact or a big difference in terms of cutting the amount of interest that you'll pay over the long term, right? Or the cutting of the number of years that it will take to actually pay the home loan, right? So that makes much of a difference. So in this session, we're going to focus on actually talking about the impact of actually paying additional extra on top of your normal minimum home loan installment that you make on a monthly basis. But before we get to that, as you know, in this channel we talk all things real estate, all things personal finance, so that you are the driver of financial situation, not just the passenger. So let's get to it, shall we? So adding a little bit extra in your home loan repayments, it makes much of a difference in terms of cutting the amount of interest that you'll pay over the long term, or even cutting also the long term. And normally long term, the standard long term that you will pay your home loan is about 20 years, 25 years, or 30 years, right? But if you choose 30 years, it means that you want to afford that bond in a short term, which means that the installment might be higher, that you just want to reduce it, but that means that you pay much more in interest. But cutting it off to 20 or less than 20, it ensures that you pay much interest. And that is the goal of everybody. Unless if you are not really thinking about it, unless if you don't mind paying additional money unnecessarily, right? So I just want to quickly make an example that will actually show you how it works in terms of paying off additional amount and what is the impact of doing that, right? So let's say you have taken up a home loan of 1 million, right? And you have taken it in a home loan term of 20 years, right? So I'm gonna make this example with the interest rate that we had between 2020 and 2021, because at that time we had the lowest interest rate. But it doesn't mean that this strategy that I'm talking about only works on low interest rate. It works on both, either ways. But it's just that on a low interest rate and you are paying above the lower interest rate, it just accelerates the cutting of the interest rate and the term of that home loan, right? And let's say the interest rate at the time is 7% and the bond repayment is 7,753. And then the total repayment that you will repay over the long term, which is in 20 years, will be I don't want to read these numbers like Jacob Zuma, okay? But let me try. 1,860,717, right? So this will be the total repayment, right? That you repay over the long term. And think about it. You only took just 1 million, but you are paying close to 2 million to just repay for that million. So you see how insane that is. And you see that if you don't do something about it, you're going to pay so much money unnecessarily. Okay, so say we work out an example where you pay 650 per month additional to your bond repayment. Remember what I said, the bond repayment here is 7,753. You just add on that initial bond repayment, you add 650. Right? And we see how the 650 makes a difference, right? Then your new installment will be 8,403 per month, right? So now what is the difference does that make, right? The difference that does make is that the new loan term, right, that you will pay will be paid in 17 years, right? But I don't want you to just focus on the 650. I want you to understand that any additional amount that you can afford, that you have, just hold it there. Hold it there, it makes a difference. Even if 100 Rand, 50 Rand, whatever it is, 10 Rand, it makes a difference. Because at the early stages of your loan, you are actually not even touching the principal. You are paying only interest. So the more you pay, it ensures that you pay more towards the principal. The principal is actually the amount that you took the loan for, which is in this case 1 million, right? So in this example, if you are paying just 650 additional, you will repay the home loan in 17 years instead of 20 years, which means that you save on 3 years. That is crucial, right? Just by doing that. And you know, I've talked about a few other strategies. Now, if you are doing this strategy and including with the other strategies that I've talked about, then it's gonna make a hell lot of difference. When you are using a combination of strategies, then you are able to pay your bond even in 10 years, even in 5 years, even in 7 years. It's all up to you, right? So what will be the total repayment, right? If you just do only this, right? Because today we're talking about just the impact of paying additional amount on top of your minimum repayments, right? So your new total repayment will be 7,11. I'm becoming Zuma now. I'm becoming Zuma. But what you will pay is that it's just above 1.7 million, right? And then you will save almost 150,000. 150,000. You can do something with 150,000, isn't it? But like I'm telling you, this strategy is just one strategy. And in the next couple of weeks, also I'll be talking about other strategies. So if you combine all these strategies, you stand a chance to pay your bond in no time. You stand a chance to pay your bond without so much interest, right? So I want you to do yourself a favor. Take your bond amount that you have right now, go to this website, right? Where you have a calculator that you can actually calculate the impact of an additional payment, right? So the website is betterbond.co.za and then /calculator/additional payment. So if you go to this website or just go to the betterbond.co.za website, and you will see, you will see the calculator there. Just go and look for that calculator and calculate and see for yourself whatever amount that you can afford, how will it look for you, right? Because maybe you'll think I'm making up this thing. I'm not making them up, okay? But what are the things that you need to check to make sure that you make this happen in terms of paying additional amounts on your home loan, right? The first thing is you need to have a budget, right? A budget that tracks your income, your expenses, your fixed and variable expenses that you have, and see what are the things that you can eliminate that actually don't give you nothing, or the things that are not of so much value, the things that you can cut off. And I don't believe that so many people are just, not so cautious about their finances, that to the level that they do not have a budget. I mean, there's so much apps that you can download on Google Store or Play Store. I mean, you can use an Excel sheet. The options are limitless, but you need to have visibility in terms of what is happening to your finances, and you can only be able to do that on a budget. So it's a good idea to look at that, right? Another thing is that you can use lump sum, right? That might come your way. Things, lump sum that you didn't plan for. Even if you've planned for, you can still take some of that portion and then throw it in the bond, right? Like maybe annual bonuses, you can take some portion of that, maybe tax refund, or maybe any other lump sum that might come your way that you are exposed to. You just throw it in there to ensure that you cut off the cost. What is really the importance of this? The importance of this is to build equity. I've made so many videos on equity, and equity is the name of the game. Equity is the amount or the percentage of money within a property that belongs to you, right? You get equity when the property appreciates in value and when you do your repayment. So the more you pay, the better you get, which is equity. So you are using your bond as a savings account, actually, because when you are repaying your bond, you're actually putting money into your savings account that now belongs to you. So that works in your favor. That maybe when you are in trouble sometime, maybe when you need some cash, you can actually refinance and get access to that equity. But that's a topic for another day. That is a topic for another day. I hope that the information that you got in this video is very helpful for you. It's very helpful for you. Don't forget to subscribe, to like, and to share with your friends this video, because I'm sure it has helped you as it has helped me. Right? It is the big elephant, the Korea manage. Cheers. I'm out.